Hello, everybody. This is Chris Kimble, founder of Kimble Charting Solutions, and welcome to another edition of Your Daily Five. And hard to believe today's July the 29th. The month's almost over with. And I wanted to kind of just confess a little bit. I've been hearing this term transitory a lot, and I don't know what it means. I don't know about you guys, but in regards to the Fed and inflation and different things. So I looked it up, and it said brief duration, temporary, tending to pass away, not persistent. So today, I wanted to talk about what does transitory mean? What does steel say about inflation? How about copper? What about cattle prices? How about coffee? And what are interest rates suggesting along this line? And so, kind of goofed up the slide I see already, but I found this piece from Friends, and it talked about all prices are increasing, and then Joy says all prices are increasing and inflation is transitory. And so we're hearing this a lot from the government, obviously, and we just heard it again this week. And so I wanted to look at some assets, and this isn't an anti-government statement, but I've always believed this is, I've been in the business 40 some years, that they always talk about don't fight the Fed. I'm of the belief that when you think of a dog, that the body of the dog is the world, and the tail is the Fed. And in my opinion, the world wags the tail, not the other way, around, that the tail doesn't wag the dog. And so one of the things I wanted to look at here was a core component of building. I just got back, had to make a quick trip to California and went through Colorado, and I'm just seeing tons of building going on. And so one of the components of building materials, as all of you know, is steel. So this is a StockCharts chart looking at SLX, the steel ETF. You can see that it's had a heck of a rebound off of the COVID lows from around 17 up to 65. That's a huge price swing. But you can see that it's getting close to the 2008 highs. And we want to think about what happened after 2008. And another core component of building materials is, old Doc Copper. They talk about copper's got a doctorate in economics, and you can see that Doc Copper, again, it bottomed also at the COVID low. You can see almost a potential double bottom, and now it's testing the highs of 2011. And so when you happen to lay both of them on top of each other, and when you go backwards and you think in transitory, I think that's where this becomes really important, from the tail or the dog. And so I'm of the opinion that prices are the dog, and the tail is the Fed. And the Fed may be hoping it's transitory, but I think the real message that all of us should pay attention to is the price message is coming from really key components, economic components and charts in our lives. And so here's where you can see Doc Copper has essentially been in a trading range from $2 to $4.50. It's up there testing the top of the trading range again. Now this is a monthly chart, so you can see 1, 2, 3, 4. It's spent 4 to almost 6 months just below the 2010 highs. And then when you look at steel, it's made a series of lower highs and lower lows over the last 13 years. And it's spent the last few months up against the top of this falling resistance. And so to me, if both of these would break out, I think that would suggest that it's something different than transitory. So I think that the government hoping it's just temporary. But when you look at these long-term charts, if we would see breakouts by these two key components, I think that'd send a message that this is a little bit more than transitory. So later on, we'll look at bonds, and I can't help but think bonds are sending an important message, as well. So another thing, if you happen to remember the Wendy's commercials from a long time ago, if you're young enough, you probably don't, but they had this very popular commercial series with a couple of older ladies looking at a hamburger bun and saying, "Where's the beef?" And of course, Wendy's patties were bigger than others. But speaking of beef, this is a fairly long-term chart. It's 5 years on cattle. And the thing that sticks out to me along that red line, when cattle has made continuously a series of lower highs in 16, and then in 17, and then in 19, and then in 20, and then here we are in 21. Earlier in the year, we had a large decline well, I shouldn't say large, but about a 12% decline. And then we've seen this rally coming back. And we see that momentum is extremely high. So far over the years, cattle prices have peaked. And I think, one thing we want to be aware of is, what could happen to beef prices if we would see a breakout of line A, which has been in place for 5 years. And there's a chance that it's formed. A bullish cup and handle pattern typically takes place during an upward trend. And so we could make the argument, well, the long-term trend is down. Well, that's true from 2016, but from 2020, we've seen a strong rally. There's a chance that the handle is complete. So the bottom line for cattle prices, if 125 is taken out to the upside, we're probably going to have to pay a lot higher prices for beef at the store. So a big point for cattle producers and for us heading to the store. Here's another chart that kind of to me has a lot of potential meaning, is that interest rates, this is the 10-year yield and kind of the copper color. This is the 5-year inflation swap. And then the dark line is the 10-year yield minus 5-year yield. And you can see that it's actually in the red, as far as what I mean by in the red, that it's a negative yield. And so right now, this could be a good chance of what the government's looking at and saying that this is transitory. Despite the other charts that looking at breakouts, you can see that interest rates aren't suggesting that they're that concerned about it. So, I want to look at another core, commodity component that all of us might be drinking right now or had earlier, and it's coffee. And this is a chart looking at coffee going back over the last 40 years. And I shared this several months ago on another edition of Daily 5, that we've been sharing this just almost every week to our customers, is that this chart reflects that in these downward trends, these blue downward trends that you're seeing that are highlighted by 1, these were all multi-year, essentially bear markets for coffee. And with coffee finally broke out to the upside, the average rally for coffee was 140%. And so what we highlighted a few months ago was that coffee had made another similar pattern here at 1 and looked to be breaking out to the upside. And so coffee has rallied from 100 to almost 200. So we see 100% rally, and it's testing resistance at 2 again right now, essentially at the 200 level. Point I wanted to bring out, when you think of transitory and stuff, if coffee breaks above 200, it frees up it to rally another 50% up to the 300 level. So a really key one. One of the things that I think we should look for in a confirmation perspective is are interest rates or bonds believing in this? And so this chart from StockCharts looks at 1-year performance, and you can see that TLT, this is obviously the popular government bond ETF, it's down almost 11% over the last year. And you can see by these green lines, other times when TLT has fallen that much in a year, what happened afterwards, and it had really strong rallies. So this would make the case that, and you can see TLT is rallying some here, still inside this long-term trend, that you can see why the government maybe is not so concerned about inflation as a whole. Lastly, wanted to touch about semiconductors. They're testing a long-term, essentially a 20-year Fibonacci extension level. They traded sideways for 6 months. Want you to be aware of this. You can trade it through SMH, that if it would break out to the upside, it would be extremely bullish. So you can see transitory, maybe hopefully it means a little bit more to you now. You can see steel is testing all-time highs, copper is testing highs, cattle prices are testing key falling level, coffee's looking at trying to break out to the upside, and interest rates yet aren't going along with it. So I think we're going to find out a lot in the next few weeks about, is transitory really true, or is the government feeding us a false story? So keep a close eye, everyone, on these key inflationary assets. Thank you for joining us again for another edition of your Daily 5. Thank you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.